Ladies and gentlemen, good morning. It's a pleasure to be here today. My name is Jacques Sciberras, and I am the CEO of Malta Ban. Start by giving you a little bit of perspective on the Maltese characteristics. Of course, it's a small state. You're probably all familiar with the fact that it's 36 kilometers long and it has 300,000 citizens. This gives it constraints in terms of scale and the type of sustainability for any organized activity. It is an economy that is upbeat. It has steady high growth and high growth potential, and recently a member of the European Union and eventually a member of the Eurozone in 2008. And this gives us the confidence that there will be a lot of scope. However, the constraints are real. Malta Ban was formed in late 2005, and for last year we've decided to focus on the development of a co-investment fund, a little bit taking it the other way around the evolution of various funds presented this morning. Most of them emerge from a mature business angel situation, a business angel market, a business angel level of activity, a mature VC level of activity, and the co-investment funds are an emerging intermediary. We're trying to tackle this the other way around. The structured co-investment fund might trigger downwards interest in more formal business angel networking and business angel activities. We're of course working on developing some training connections through a partnership with Go Beyond, some matching platform thanks to our cooperation with AngelSoft, and that helps a lot. Networking with other networks in terms of best practices, and our participation here is extremely valid and important, and of course advocating and disseminating the activity on the island. But predominantly we've decided to put all our energies in the development of the Malta Venture Fund, which is an initiative by government. It's a government's third attempt to provide seed capital incentives in Malta. The first two attempts took the form of the Technology Venture Fund. Oh, sorry. The first attempts were in the form of a Technology Venture Fund. They were managed by a public agency, and 4 million euros were never spent in Malta. Eventually, there was a renewed effort in late 2006 for a new approach. The government wanted public-private co-investment, outsourced management through a tender process, tax benefit driven, and of course restricted to seed and early stage companies in Malta. A few words about its structure. The co-investment fund has a target to raise 24 million euros in total. It's got a 10% public share and a 90% private share. Again, our role was to try and tilt this and increase the public support. However, that's the constraint that government has set. It's got the benefit, the tax benefits are 30% tax credit after 3 years of investment in the fund, and it has the aspiration of being eventually quoted on the Malta Stock Exchange, but that is not on the forefront of the agenda at the moment. Public and private investors are shareholders of a licensed fund regulated by the Malta Financial Services Authority, and the public share of this fund has already been invested so that it is used to kickstart the fund. Shareholders, of course, elect on a pro rata basis the board, and the management is outsourced to a joint venture. At the moment, the agreement is being finalized between Kurmian Partners and Malta Ban Limited. Let's talk a little bit about some general observations about this experience. So in terms of the question of why co-investing, from what I've seen, government's interest is to lever the skills available through public-private partnership to drive the development of this niche activity. Previous experiences show that it's very hard to get a public agency which has never done this before to do it on its own. The second biggest challenge is not necessarily providing capital, but initiating a substantial level of ongoing investment activity in seed and early stage investments. The pros and cons of co-investment funds with the public sector would be the following. Fiscal incentives are an attraction, are a hook, are a very valid hook. It also helps the visibility of the fund. It lends to the visibility, and it also can kickstart potential business angel activity downwards in our case. The cons, the difficulties or the challenges that we're facing include the fact that public agencies do not necessarily understand all the implications of various models. They participating with the public sector has costs of increased transparency, bureaucracy, and longer negotiating and decision-making time until the scheme is successfully developed. And for business angel networks or business angels who are aiming to set up this activity, you must have a long-term commitment. The negotiating time is much longer than at least we would have expected. The challenges include the fact that in the original agreement or the call for application, there were various elements or considerations that were missing. As was mentioned before, exit, for example, did not even feature in the considerations of the bid or the timing or how the fund would crystallize. An underlying constraint, and I think this is common to everybody, will be a quality deal flow. Since the fund is restricted to companies in Malta, we tried and pushed so that the scope of the fund is not seed strictly interpreted in Malta. We've also tried to extend it to growth finance. Remember, the biggest companies in Malta are considered seed in most other circumstances, so, or micro companies, but for us they're big. And when the government meant seed, it meant really small pockets of funds, and this would have broken the economics of the proposition. Another challenge is the team and expertise versus the management fee. If government is pushing a management fee which is unsustainable, you can then only afford a certain size of a team and a certain level of expertise. And finally, the importance of the skills of the people you're negotiating with. And I think here there are some opportunities for even the IBAN platform to help and assist in this area. So some considerations, and this is where I stop. One would be more sharing of best practices and successful co-investment models are necessary, and knowledge dissemination towards the various actors. In public agencies and policy-making agencies, regulators need insight, appointed boards need insights, appointed management, and of course entrepreneurs need more awareness of how these funds work. Finally, bans can facilitate the knowledge transfer into public agencies and have an important positive influence on their thinking. And as a conclusion, I would say we all collectively should focus on the recommendations of the IBAN white paper, which really address most of what I would recommend in this sense. Thank you.